Welcome back. For the time being, we're seeing a near-term bounce from the lows of the day. The 17,600 mark has got defended. We were talking earlier today that around 17,620, 17,630. That's a crucial mark that the bulls would like to defend on a closing basis. For the time being, the buy on dip has worked out, but let's see whether or not we can hold on to that level, at least for the first hour of trade. Let's focus on another company and invite our second management. We have CAMS. That company, in fact, acquired 55% majority stake in Think Analytics. This acquisition is expected to be completed by April itself, and the shares will be acquired at a mutually agreed pre-money enterprise value. To discuss the acquisition, the way ahead as well, we're joined with Mr. Anuj Kumar, the MD at CAMS, who joins us on the show. Hi, Mr. Kumar. Thanks so much for joining in. Congratulations on this particular acquisition. A couple of questions, though. If you could tell us, do you have plans on buying the remaining 45% as well in the company? At what value will you do that? And also, if I'm looking at it, in the last year, you did around 31 crores of revenues. At the 9-month mark, you've done close to around 24 crores. Where do you see this business scale in terms of revenues, say for FY24?
Hi, good morning, and thanks for having me over. So if I were to just tell you the rationale of what we've done in the capital markets, we've been present with a very broad RTA suite for mutual funds, fund administration for alternatives, KYC, AML services, and a large digital transformation stack. What we've been trying to build was an analytics practice. And I think where Think Analytics comes in is that both from a point of view of just data management, data analytics, and then going all the way to consumer behavior, preferences, retention, etc. They built a full stack of services and products which are sold in the domestic market, but also the major markets overseas. That's point number one. In addition to that, you may have noticed that they have almost been one of a duopoly producer of ingesting SMS data to give consumer-level insights to various firms, including fintechs. There are very few firms with that kind of capability. There's a big intersection of that market with the account aggregator market, where we want to play. So I think it's at a very nice place where it complements our ability on data analytics and the mutual funds and capital markets, and also has a nice intersection with account aggregator.
Okay, all right. But Mr. Kumar, just to get back, you gave us the rationale. We appreciate that. Could you tell us where do you see this number scaling to in terms of revenues? It should end this year just going arithmetically to around 35 crores if I put in what you've done in 9 months. You see it go towards 50 crores in the coming year, FY24, and do you have an intent to acquire the remaining 45%? If you could quickly answer both those two questions.
No, absolutely. So the second question first, we have every intent to acquire 100%. Typically, we want to bring in the promoters and the business both. So it's a staggered purchase where we own 55% now, and we have a call option in the year 3 and 4. So hopefully by the end of the 4th year, we would 100% of the firm. In terms of revenue growth, they've posted high double-digit growth in the last 3 years. So therefore, our expectation is that the base of 35 crore will continue growing substantially in the current year also. I don't want to give any specific number guidance right now, but high double-digit growth in the last 3 years from Think. I think the trend will continue this year too.
Mr. Kumar, let me just zoom out a little bit on the overall strategy, because I believe you're looking at doubling your revenues from the non-mutual fund business as well. You've also got the payment aggregator license now. So how much additional investment are you going to make in these other businesses? And can you give us an idea of your targeted revenue pie and by when you see yourself getting there, FY24, FY25?
I think what we've said in the past is that by FY27, we would like to double the non-MF revenue contribution from 10 to 20%. It stands at about 10.5% right now. With the amalgamation of the Think business, this should straight away go to about 13%. I think the climb up from there from 13 to 20s in the next 3 to 4 years is entirely possible, and all our other businesses, including insurance and alternatives, are kicking quite well. The payment aggregator business isn't really revenue accretive from a license perspective. We're just moving the business as per statute from CAMS into the payment services subsidiary. But yeah, it's a nice development because it ring fences the market and allows a fewer players to play. Only those ones who have a license will now be able to offer the services.
So just a follow-up on that, since you mentioned that you get to 13% with this acquisition and then hopefully scale it up to the 20s in due course, you do have a fair amount of cash on the books. Would you be looking at the inorganic route, more acquisitions to get to that stated target of doubling the non-mutual fund revenues?
We are completely open. We are completely open. So if you see, we brought in a small capital markets participant, Fintuple Technologies, about a year back. We're bringing in the Think Analytics team now in the month of April. We will conclude the transaction. And we are absolutely open. What we are looking for is absolutely sharp, incisive synergies and our ability to go to market together and a product suite which complements us. So we will not venture into too many new areas, but subject to those conditions, absolutely. The revenue and book build out, I think, is a primary objective.
Okay. Mr. Kumar, good morning. You started by saying that you're looking to build a stack of services and products in the analytics practice space. So anything else that we can look forward to in terms of any more inorganic acquisitions? What is the cash on the books that you have, perhaps, that you've outlined for such acquisitions in future?
So typically, if you see, our cash generation has been very strong. It's a low capital deployment business. We dividend out almost 60 to 65% of the cash flows every year. So cash position is accretive today. Pre-acquisition, the cash position would be just short of 500 crore. So I think we have the book and the balance sheet to be able to do these things. But like I said, we don't want to just hastily jump into just anything. But wherever we find deep synergies with a strategy, we will certainly bring in lumps of revenue and smart founders who've done good work in the markets.
So anything that, with this 500 crores of cash, anything that you would look at in this calendar year, or you're not yet?
This calendar year may be difficult. I think this calendar year will be just busy bringing this team over and making sure that we are able to expose our franchise to their unique capabilities and build a revenue book. I think that's a first priority. And once we have stabilized this, taken a breath, and then we'll move on to the next.
Okay. So nothing in this calendar year. Got that. I wanted to ask you, there's an expectation of SEBI implementing this uniform total expense ratio. If and when it comes through, what do you think the impact would be on a business like yours?
I've said in the past, and I'll say the same again, that we sell a deeply embedded value to our clients at prices of delivery which continue to come down every year. So I think it's a deeply economical model and very, very central to the mutual funds arena. Whatever is being said about the regulator bringing down TERs, our estimate is that some part of that will certainly happen. We can all speculate what will happen. It will perhaps become clear in the next 30 to 60 days. We expect that we will be continuing to demonstrate value to our clientele. And therefore, if the intent of your question is that does that mean pricing compression for us? We don't believe it will do that. We believe that we are enhancing the value to our clients, and they'll be willing to pay the price that we charge.
Okay, all right. Mr. Kumar, before we let you go for FY24, if you could give us a couple of targets, what kind of a revenue number are you looking at, as well as margins? A rough band will do.
I think all depends upon how mutual fund assets behave. You know that this has been a tough year coming over FY22. So in FY24, if mutual fund assets do grow in the teens, in the mid to high teens, there's every possibility that we will grow revenue by about 13-14%. So a lot of that is contingent. I don't want to give a firm answer because you know that we are at the end of the food chain, and a lot depends upon how the markets behave.
Okay, and margin, rough margin band? Mid-teens, we got that in terms of revenue growth?
So we will hold our operating EBITDA margins, even in tough years, have held over 40%. And we are confident that we will continue delivering that. I think if you've been watching the quarterly numbers, we've been in the 43-44% range, irrespective of very, very, I would say, soft revenue build-out numbers. So we're confident of early to mid-40s on operating EBITDA, even in the coming year.
Okay, so margin in the 40s. Mr. Kumar, can we sort of end by asking you a little more on this payment aggregator business? Exactly what is your plan there? What's the revenue potential? How do you scale it up?
So payment aggregators, is an established business. We've been servicing mutual funds, asset managers, NBFCs, etc., and own about 50% share of our mutual funds in the SIP and eNACH book. That part will continue.
Okay, all right. We'll leave it at that. Thanks a lot for joining in. That's CAMS on understanding the synergies between the Think Analytics stake and what happens with the business itself. The stock is under a bit of pressure, down almost 0.7%, but the management is trying to build the analytics practice, a complete stack of services and products in this analytics space. But let's move on and talk to Mitesh now. Mitesh Thakkar joins in. This is our segment Charting Trends. The market, by the way, is pulling back a little bit. L&T is actually the one batting for the bulls this morning, up 1.5%. Bajaj Auto is up 1.5% as well. Britannia, BPCL are a couple of stocks. that are in the green. But today we talk about some stocks from a slightly medium-term perspective. Mitesh, first on the index itself, what are the charts indicating? In the medium term, do you expect the markets to revisit their lows? And first of all, are we looking to revisit Feb lows itself? And what's the level that you're watching?
So, Sonia, on the Nifty, my sense is that, with the rally which started in July of 22, we moved up from 15,000 odd levels to about 18,800, which was a new high. And then we have corrected. But I think broadly, we haven't gone and make a directional kind of bias. So I think the index looks range bound. I think next few months, which could be about 2 quarters to 3 quarters, the index might do a range of about 16,950 on the downside and 18,500 on the upside. If 16,950 breaks, we might have a one-time kind of a decline to about 16,500, 400 levels. But I don't think we are looking for a big directional bias in the next 6 to 9 months. So broadly, I think below 17,000, around that level is the time to buy. Closer to earlier highs of 18,500, I think there are times to take profit. So you should be slightly more trading in your approach. But looks like consolidation at higher levels, which is not a bad thing in the longer-term charts.
Okay. All right. Mitesh, that's about the index, but let's talk about the CPSE index. Now, that seems to be in a world of its own. Even on Monday, that did very, very well. What are the targets you're looking at out there?
Okay, Nigel, let me confess this. I think Nimesh had pointed this out long back, and I was keeping a very close eye on this CPSE index. We had a high of around levels of 4,400 way back in October of 2017. And then, since October of 2021, we have had about 5 or 6 attempts around that level of 4,400, not getting a monthly close above that. I think this time it looks like the chart setup of the individual stocks, which have weightage over there, and the index itself looks like we'll have that breakout. And once that happens, the CPSE index on a minimum, I would expect it to do possibly levels of around 4,950 to about 5,000. But 5,400, 5,500 looks like to be the more logical target, and we can even have higher extension because we'll be in a new all-time high territory. So in that sense, very, very positive over there. In fact, I would suggest to people who are investing with a medium to longer term outlook should shift a good amount of weightage of their portfolios into PSE stocks.
Oh, yes, absolutely. Some of these names have been really breathtaking, and that the way the index itself has moved at a time when the market has been in a very lackluster, dull phase, it's quite breathtaking. So, Mitesh, make it a little simpler for us. Which are the charts within the constituents of this index which look the strongest to you?
I've picked up 4 stocks over here. Disclaimer that I have interest in all the 4. So, basically it's clearly a vested interest. But I think these are the stocks which are clearly showing signs of good expansions happening on the monthly and the weekly and the quarterly charts, which means that next few months, these stocks should keep making new highs. And as you were rightly saying, they've been resilient. While the Nifty has failed to make a new high since the last 3-4 months of correction, stocks like PFC, for example, that's my first pick, is clearly now trading on a new high. And that's, I think, if you take out the dividend, which it paid about 3.5-4 rupees, that even adds to this trend. The longer-term monthly chart suggests, and this has been a recommendation earlier as well, that a target of 175, 180 is a minimum. So I think we are now close to that, but we are looking at an extended target of around 200 over here. Any declines would be a very, very welcome buying opportunity. Let's say if you get a 5-7% kind of correction because of global issues, which is around 155, 156 levels, if you get an entry, buy with a stop below 144 for targets of 200 in a medium term, I think a few months kind of a perspective.
Okay, just want to say, Mitesh, thank you very much for, of course, all of those ideas there within the central PSU basket. Resilient is a word you could use for the market right now as well. Just look at the way the market's pulled back and all the dips are getting bought. It's absolutely fascinating. A lot of the metal stocks, you should get the intradays up for you. Tata Steel, Hindalco, some of the auto names like Bajaj Auto and NTPC. Phenomenal moves from the opening gap down that we had. Many of them are actually holding out quite nicely in positive territory. Just 22 points lower now, Sonia, on the Nifty. Who would have known?
Absolutely. So a big comeback over there in the last 1 hour. But Mitesh, you were talking about the PSU space, right? Anything else that you like on the technical charts for slightly medium to longer term?
Yeah. So 3 more stocks, Sonia. I've covered PFC. The sister concern or very similar kind of business profile is of REC, which I think is heading towards 145, 150, which gives you roughly about 15% kind of an upside in the next few months. But that's the first target. The extended targets are around 160, 165. So you have roughly about 34% kind of an upside from current levels. That's a buy. Keep a stop above below levels of 110 over here. And if you get a decline of around 5-6%, even good levels to enter over here. The next stock on my list is Gas Authority. And, very interesting thing over here. If you look at the long-term charts, which is the monthly charts for Gas Authority over here, 2016, we got a high of around 106, 107. And then in 2022, early, which is about Feb, March, we got a similar high on a monthly closing basis. Now we have managed to get past those 106, 107 levels. So the entire formation looks like what typically chartists will call as a cup and handle formation, giving you a target of roughly around 125, 130 to begin with, which means another 12-30% upside from current levels. But the extended targets are really interesting. And I'm looking at a target of around 150, which is roughly about 33% kind of an upside. And this, now that 106, 107 is crossed, I think this month's low of 102 becomes your stop loss. So very positive on GAIL. And again, as I said earlier as well, we have interest over there. And my final stock is Power Grid. The stock, if you look at the last about 1.5 years of price movement, it's had a range between 228 to about 195. And it's had multiple points on the upper end of the range, which is around 228 to about 230 levels. And even on the lower side, about 195 to about 194 levels. Now it looks like, with the indicators rising on the longer term charts, now it looks like the stock is ready for a breakout. So once it gets past 230, I think I would look at a minimum target of around 275, 255 to about 260 over here. But eventually 280, 290 is what I'm looking at. And therefore, it's a buy about 230. Keep a 10-point stop loss once the breakout is complete. And look for about 30 point of minimum target with the possibility of 50, 60 points coming in on the upside.
Okay. Thanks a lot, Mitesh, for that. That's on the technical charts. But let's do one thing. Let's take a short break. The other big headline is that crude prices have fallen by $3 a barrel, with Brent now at sub $84. We'll get you more on that in just a bit. Stay tuned.
Welcome back. Well, a good recovery is what we're seeing on the index itself. We're down only around 15 points odd. So that, that dip that we saw in Monday's trading session, maybe the Indian markets were prepared for a bit of a disappointment from the Fed. Well, let's turn our attention, though, to the commodity space. Manisha Gupta joins us to tell us the one commodity that she's tracking. Manisha?
Nigel, thank you for that. Well, the knee-jerk reaction and the reaction to the Powell statement has come in, and we've seen that sell-off also in the markets already. We did see 2 to 3% of a decline in the overnight markets, and while we're not out of the woods yet, it still is under the pressure, but many of these commodities now trading off its lows. So the dollar index strength is something that continues to weigh on to many of these dollar-denominated commodities. The markets also are now pricing in a 70% chance of a 50 basis point rate hike in the month of March. 3 days ago, it was a 30% of a probability of a 50 basis point, but that clearly has changed in the overnight markets there. The street is clearly reacting to the Powell statement, where he said that the central bank is prepared to move faster and the interest rates could peak higher if the data warranted. The markets also are reacting to the Chinese 2023 numbers, economic growth target at the lowest in 30 years. We also have seen the Chinese import data decline by nearly 10%. So whether it was the inflation numbers or the China trade number, both of these disappointed, and that is where we saw the pressure come in from. Apart from that, it is also about the record current account deficit for the month of January in Japan. The Chinese yuan right now is trading at a multi-month lows. That also is weighing on many of these commodities, 9-week lows, by the way. So that is where the pressure is coming in from. So the crude oil prices declined by nearly 3.5% in the overnight markets. This has been the major decline in last 2 months. But as I said, 1/10 to 0.25% of an increase is how we are trading in the energy markets right now. The precious metals actually were knocked out. You saw the gold prices come down from 1860 of a high to nearly 1810 in the markets yesterday. 2% of a decline there, and the worst day in a month. Silver prices also declined quite sharply. It's trading at a 4-month lows. We've broken below $21 and $20 per ounce as well on your screens right now. In the base metal prices also, copper prices fell by nearly 2.5%, and we've seen now copper prices come off by 7% from the kind of highs that we saw in the month of January. The chart should come in on your screen on what we've done on a week-on-week basis. So as you can see, 1.5 to 5% of a decline in last 1 week for many of these metal prices coming in. But now all eyes on the US non-farm payroll data, where for the month of January, we saw a number come in at 528,000. Street was anticipating 200,000. So we got a blistering number in the month of January. Now the Feb estimates are for 200,000. If you see anything higher than there, then the probability of interest rate hikes perhaps gets higher.
Okay, thanks a lot for that. So, well, everyone's expecting higher interest rates, especially after the hawkish commentary from the Fed. Thanks a lot for joining in, Manisha. Let's slip into a quick break. On the other side, it's our Women's Day special segment. Lata will get chatting with Manisha Girotra of Moelis India and Renuka Ramnath of IVCA to discuss women's participation in industries like mutual funds and the private equity and VC investment picture. Stay tuned for that.